Welcome everyone. Today we are looking at one of India's most recognized automobile manufacturers, a company that produces everything from commercial trucks to passenger cars to premium luxury vehicles. This is Tata Motors. But the interesting part is this: Tata Motors operate across multiple segments of the automobile industry, including electric vehicles, and that makes it a fascinating company to understand from an investment perspective. Tata Motors was founded in 1945 and is part of the Tata Group. Initially focused on commercial vehicles, the company gradually expanded into passenger cars. Today, its operations are broadly divided into three major segments. First, commercial vehicles. Second, passenger vehicles in India. Third, luxury vehicles through its subsidiary Jaguar Land Rover. Commercial vehicles include trucks, buses, and logistic vehicles. Passenger vehicles include models such as Nexon, Punch, and Tiago. And through Jaguar Land Rover, Tata Motors participate in the global luxury automobile markets. This diversified structure creates multiple revenue streams. One of the most significant moves by Tata Motors was the acquisition of Jaguar Land Rover in 2008. At that time, many analysts considered it a risky decision. However, the acquisition allowed Tata Motors to enter the global luxury car market. Jaguar Land Rover now contributes a significant portion of the company revenue. The company also operates manufacturing facilities in several countries and export vehicles worldwide. This international presence allowed Tata Motors to participate in both emerging market and developed markets, but it also introduced exposure to global economic cycles. The automobile industry is capitalist intensive. Companies must invest heavily in research, manufacturing, and supply chain. Tata Motor has experienced periods of both strong growth and financial pressure. Demand cycle, commodity pressure, and global supply chain distribution can influence profitability. However, the company has recently focused on improving operational efficiency and reducing debt. Another important development is the company's increasing focus on electric vehicles. Models like the Nexon EV have helped Tata Motors establish an early presence in India's EV market. This strategic shift could influence future growth. So, what gives Tata Motors its competitive advantage? First, strong brand recognition in India. Second, leadership in the commercial vehicle segment. Third, early investment in electric vehicle technology. In addition, the company benefit from being part of the Tata Motor, which bring brand credibility and strategic support. However, the automobile industry remains highly competitive. Innovation and cost management plays critical roles in long-term success. Like any automobile company, Tata Motors faces several risks. Vehicle demand can fluctuate with economic condition. Raw material cost can impact margin, and global competition in both luxury and EV segment remain intense. So the important question for investor is not simply whether Tata Motor is a large company. The real question is whether its strategy can sustain growth in a rapidly evolving automobile industry. Understanding these dynamics help investor makes more informed decision. Thank you for listening.